Good morning, ladies and gentlemen. This is Clueless 8, and this is the quick end of the week, end of a fantastic week of Clueless 8 trading. Today is October 9th, 2015. I'm going to keep this short and sweet and straight to the point. Behind you on the screen, you're looking at the E-minis S&P 500 Index Futures right here, and it's up about 5 to 6 points. And marching ahead as we close the week here on a Friday. Couple of quick things here, very, very important. One of the biggest lessons in life and in trading, and I don't want to get into the preaching mode right now, honestly speaking, is the fact that you have to learn from your experiences. People and traders who refuse to learn from their experiences never adapt, never learn how to be flexible, and stick to their old ways of doing bad business. I am not talking about being a bull or a bear. I'm talking about just being plain stupid. I have over the years made many mistakes. I still do. However, my bounce back period from quickly in nanoseconds learning from those minor mistakes, and I don't make major mistakes that much anymore. Okay, I really don't. But the bottom line is that is very, very quick. What I've found as I observe my traders and free trial subscribers and many other people out there in the forums who are not yet Clueless 8 trading members, that they keep on sticking to their same old dogma of hating the Fed, not understanding what the backdrop of the sentiment in the markets, and even when the technicals are clearly screaming at them on a buy point or a sell point, they refuse to budge. Now, saying all that, I will say that the majority of people and traders and investors, the media included, and you know that, look at yourself in the mirror, please, right now, okay, is so terrified and so pessimistic and so scared every single time the markets get, have a correction, and the feeling that that's it, we're going into a bear market. And you listen to all these idiotic pundits, and there's nothing wrong with it. There's a lot of, educated derelicts in this world. I didn't say that. I think Oscar Wilde said that. So there's way too many educated derelicts spewing out stupid stuff all the time. Nobody knows everything. But please, to keep on saying the same stupid, stuff that everybody knows about. China slowdown, European issues, U.S. domestic politics, earnings, you name it. So tell me something new. Now, saying all that, what it really comes down to, ladies and gentlemen, is really to study the technicals without, and to understand the finesse and read in between the lines, known as reading the tea leaves. And I think I tend to do it pretty damn well. Because right at the bottom of the market around here, on the double bottom, obviously, you can see that on this chart, but you can see it much more clearly on my other charts. I said this market was going to have a violent upside. My exact words were the violence to the upside is going to be equal to the violence to the downside. Well, ladies and gentlemen, you are just witnessing it right now. And the ones who have, worked with me, look, we didn't buy here and just close our eyes and say we're going to sell here. Anybody who says that is a lying idiot. What we did was we staggered our buys. We went short at times, and we did well. We have tactical shorts during the day on a 2-day basis. But our buyers overall remain long. The fruits of our labor are justified, are clearly validated in our P&Ls. Well, my P&L at least, and I'm sure a lot of you out there. You do not need to throw in insane sums of money to make insane sums of money in this market. You can make, as one of the members said, make an insane sum putting a small amount in there. But that's part of it is a luck factor. Read that book, by the way, The Luck Factor, okay? And a lot of it has to do with understanding the technicals and thinking outside the box. So let's just dive in there, because I don't want to take up this whole 15 minutes. 5 minutes into this into this web broadcast here, going on and on about changing your mental attitudes about things. Look, guys, ladies and gentlemen, the world is not falling apart. We're entering a deep, powerful earnings season. some of the earnings are going to be terrible. Okay, and stocks you're going to be excited about are going to perform poorly. But then what's going to happen? If the overall trend is good in those particular companies, regardless of what their earnings are now, they will climb from the bottom. I have showed that hundreds of times in the likes of Amazon, Netflix, you name it, many of them. These companies are long-term growth companies. They're not one day fly-by operations. So if they correct 10%, great. You can trade them. So I'm not saying that easy, but you know what? That's just the way it works. Haters will always hate. There are people who loathe the U.S. economy. I don't understand why. They have a great living, but they benefit so much from this fantastic, unbelievable country of ours, United States of America. But you know what? They're always hating the U.S. We don't know what we're doing. We're falling apart. Blah blah blah. I'm sick and tired of hearing it. Believe in U.S. exceptionalism, ladies and gentlemen, because that's the reason why you're here. Many of you are immigrants. In fact, all of us are immigrants. We all came here from somewhere else, right? So the bottom line is that we use our brain, we use our intellect, we take personal responsibility, and we make money to provide for our families, to take care of our parents, do all kinds of stuff. So self-loathing and hating the U.S. on every chance you get, we're going into a deep bear market, blah, blah, blah. I'm sick and tired of hearing it. Yes, we will have corrective pullbacks, but we're not going into a bear market yet. You get into bear markets because the Federal Reserve Banks of America and central banks around the world start to drain the swamp. What does that mean? When they start to tighten liquidity to a level where corporate profits and basically corporate profits start to shrink because they can't handle the debt load anymore, and all kinds of stuff happens. Emerging markets go into a complete tailspin. Well, none of that is happening, and I'm not going to sit here and predict when it's going to happen. Maybe sometime next year we go into a multi-month bear market. We have had these quick multi-month bear markets here. 20% correction, down 3,000. Yet you don't hear a peep saying, hey, we should buy the market here. So let's get straight into the technicals here. This is it's a chart that I put out a while ago, showing the channels. Okay, I think within the past 2 weeks or so. So when I look at the channels here, the best way to look at it is on an hourly basis. Okay, this is quite a technical chart here. This is the peak. This is the Fed reversal on that infamous day on the 17th. Okay, and that's a double barrel reversal, bearish engulfing. See the red bar? You want to get out of Dodge on that type of thing here. But that was a fake out because on the daily it doesn't look like this. Anyway, so here we are, and guess where we are right now? Can you guys just look? We're exactly there. Did I not tell you we'll get here? Absolutely, I told you we were going to get here. So now at this point, we probably have a little bit more room to move before the Dow corrects. Correction doesn't mean we're going to crash and burn, and the S&P 500 is going to just on one day lose 400 or 500 points. It means from a technical standpoint, and by the way, these channels, right? So here's the broad channel we're traveling in down. We created a double bottom around 1860 or so in the E-minis. That translates into about 1868 or so on the S&P 500. I drew these channels, and these are very precise tactical channels. If we enter this channel right here over 2023.35, let's say, okay, very clear. Then we're going to basically just literally over a short period of time get up to 2060. Okay, just the way it's going to happen. I'm letting you know right now. I've drawn these channels for many years, and they've been extremely accurate. Yes, I can tweak them around a little bit, but I picked the best inflection points that I could think of. I could actually bring it down here a little bit. I do have some flexibility with this stuff here. So let's call it 2050. Okay, that's a more palatable number. So here we are. You know, we're going to have a little fight here because on a short-term basis, you know, a channel rejection, entering a channel is not that easy. Because once you enter a channel, you get a big rush of institutional money that comes into the market. What we witnessed is institutional money coming into the first 5 business days of the month. I've said that many times, and it happened again, where large mutual funds and pension funds put in billions of dollars into the market, placing their bets. And the second thing was a massive monstrous short squeeze, which some of members here too witnessed and unfortunately suffered. Okay, but hey, you know, we want to go against, you know, big money coming into the market. That's your prerogative. I don't care what the technicals say. Money's going to go in, and then the technical's going to correct. So anyway, so this channel entry is around the 2024 level. Looking at it on a, so once it enters there, you're looking at that, that's going to be your trading range. 2022, 2025. So call it about 150 points or so. So let's take a look at a closer picture so we understand what's going on now. Okay, so on a short-term basis, you're going to see some, obviously, the good news is on a 1 hour, on a 30-minute basis, we're actually tracking the 50 and the 34. As long as we don't deviate too much away from the 50 and the 34-day SMA. And people use all kinds of different moving averages, nothing wrong with that. But I use this. So this is the 50 and the 34 SMA, and then I have this line here, this magenta line, which is a 5-day SMA, or simple moving average, which I call the trader's line, trader's moving average, short-term basis. Bottom line is, as long as we are within a reasonable distance, you can look at it visually, from that, we're going to be okay. When we deviate too much away from it, that's mini technical euphoria, right? So you got to revert back to the mean, and that's exactly what it did. See? Now we have upward sloping 50 and the 34, so that's looking good. Internals are definitively overbought. So short-term pullbacks, meaning it can last half an hour, it can last, maybe 4 hours, they're almost mandatory. Right now, I wouldn't be a large buyer of going in there other than tactical bets like the Netflixes that we played for 2,000+% yesterday, okay? Those are different stories. But right now, I wouldn't be going out there and putting out a slew of new buys. Why? Wait for the market to reset a bit. There's no big deal. Swing trades, different story. Junos and stuff, stick with it. That's my opinion, So bottom line is, here we are. We're technically overbought. It would be nice to see it get oversold here. I don't know if it's going to happen today. Today's Friday. There's a lot of scared shorts out there who want to close their books and just say, you know what? I just got burned way too much. I can't take this anymore. So it's possible that we come down here. And I drew this line myself because that's this thing here. A lot of new members have come in. Welcome. You're going to get used to my style. Sit in on the group coaching sessions. Go to the YouTube Clueless 8 channel. Look at the beginners coaching sessions, advanced coaching sessions. I'm very straightforward. I am not some rocket scientist out there. My charts are understandable, but they still need to be taught. So that's where the group coaching sessions, if you sign up under that as a 5-pack session, it's under the members area. Click it and come and join the weekend session. This weekend, it's going to be Sunday at 5 p.m. And then I think starting next week, I'm going to do the Saturday morning ones too. But right now, Sunday at 5 p.m. Saturday, it's family time with my kid and very high performance cars. How about that? Okay. So here we go. So we're looking. So we can on a bullish market. You got to understand bullish characteristics are different than bear characteristics. Technicals act differently. On this one, if the market does want to go higher and kiss that line here at 2023, that comes to about 2030 on the S&P 500. Just so you know, it's going to come down here, retest this red line because that was the last retest. Just look at it simply as an intermediate bottom, and then bounce from here. So looking at the thing here, this is the entry point for the bulls. Like, it'll be fantastic. I wouldn't be a massive buyer, but I wouldn't be surprised if we tactically play our bets up towards the 2020 level, which is around 2030 or so, a little less than that on the S&P 500. In the meantime, pullbacks I believe will be contained. We are right here on the rising 50 and the 34, so we could have a slight pullback here to reset. Let's call it 60, 70 points on the Dow, and we go from there. So, I mean, I'll post all that stuff out. So, what you guys got to do is fix your head and act on it. Because remember, charts don't make you money. I give you phenomenal stuff. It's your mind and your mental ability to react and act is what makes you money. The pain of regret is far worse than the pain of sacrifice. And believe me, I know that, and a lot of you know that very well. So stop just beating yourself into a frenzy because you're constantly missing trades. So anyway, so that's what I'm looking at. Now, now keep in mind, some of you newer members might be thinking, hey, this guy's all talking about indices and stuff. What about stock? Well, I give enough stock ideas out there. The reason I want people to focus on the markets, because the reality of the thing is that without the markets, all your trades go to zero because you don't know how to manage it, okay? So that's why I'm looking at it. The Dow Jones Industrial Average, most max move is 17,200. That's what I'm looking at right now. And